Good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the daily Bull versus Bear webinar here. Steve Miley on the call on Wednesday, the 11th of January for tradeday.com. Welcome, everyone. We're going to go through what's for me the usual regular run through here today, calendar, what we've had, what we've got coming up, articles from the major news wires, what are the fundamental macroeconomic events that are impacting markets right here, right now, and then we'll take a look at the charts and see the trigger points from the charts, what could be interesting for today. Right, let's start off with the calendar in here. So going into today, nothing really significant of note. Crude oil inventories we have at 10:30 Eastern. Other than that, we've got a 10-year note auction. Unless you're trading treasuries, not going to really impact you. So a very light calendar. 8:30 Eastern time tonight, we do get inflation data of China. So if you're trading late in the overnight, that could be of interest. So maybe watching that. But really data, unless you're trading oil or treasuries, if you're trading the indices, none of these are really going to impact the markets probably too much. Just as a heads up, just as a note, going into this week, we do have earnings season kicking off in earnest on Friday, okay, with the financials. So in here, using investing.com earnings calendar, which I will put into the chat if you want to take a look at that. From Friday. So we really focus on, we do get United Health, but the financials, JP Morgan, Bank of America, Wells Fargo, BlackRock, Citigroup, Bank of New York Mellon, and First Republic Bank all reporting. The top 3-4 of those, probably the most important. JP Morgan, Bank of America, Wells Fargo. We'll certainly be watching those three, and maybe United Health as well, but not usually a big mover of the indices. The financials are ones that usually move the indices more. So we're looking, that's a bit further ahead. Going back to the daily calendar, and going and skipping back to yesterday, we did get a talk by Powell yesterday. So Powell did testify. And if we come in here, I don't know if he's, it was covered in the European version, maybe not in the, no. But basically, where are we? Powell didn't really comments avoid rate policy yesterday, so didn't really give us any clues in here. And Reuters has spoken a lot. CPI for tomorrow. This is the big, obviously, data event of the whole week. We didn't have really too much to focus on this week. This is the big data event, and then we've got earnings kicking off on Friday, and they mentioned that in here as well. Jefferies had quite negative results. We did get Jefferies posting already, actually, but not really impacting the broader indices at the moment. But they were certainly a little bit disappointing in here from yesterday. Flipping back to 5 things to grow, to start your day. So pay attention to the bond market, not the Fed. Jeffrey Gundlach in here, Capital Chief Executive of Double Line, looking at bonds over stocks going into this year and saying that maybe the bond market's got it right. And obviously the bond market is very much pricing in potential for a recession and potential for rate cuts further out. Apple starting to use custom display units that it produces itself from 2024 potentially. Obviously a negative for Asian providers of components, looking to provide its own components in here going forward. After a year long time with America, stocks have provided a disaster for bulls. The odds of being short suddenly becomes so. Goldman Sachs basket of most hated stocks climbed more than 4% on Tuesday. So stocks in here starting to rise. A bit of FOMO going on, and maybe near fear of missing out. And obviously stocks gained again yesterday, looking certainly more positive. Looked like a bottoms in. Clearly, though, tomorrow's going to be critical. We'll look at the chart shortly. Remember, the last 3 CPI datas have been really, really big sessions in here. So tomorrow's going to be really key. So Wall Street ended higher yesterday. Policy comments avoided by Powell. Stocks edge higher overnight as US inflation and bank earnings loom. We've already covered all this. So I think it could be a bit of a non-data. US was just steady with inflation. China in focus as well in here, and the whole recovery story from China as they continue to open up. Fed's rate cut mantra rejected by markets. So yeah, markets continuing. We've looked at this repeatedly on the CME tool, right? The CME tool in here, if we look, for February now, 80% chance of just a 25 basis point hike priced in. If we go out to the end of this year, the 13th of December, remember that takes us up to in here for 54.75. If we look at the middle of the year, we're up to maybe 475, 500. Okay, so we're looking at a total from 425.50 where we are now, up a total of 50 basis point, and then through September 475, 500 still. And if we go through the end of the year now, we're more likely at either 425, 450, back to where we are right now, or 450, 475. So looking for 50 basis points up and 50 basis points down through the year. That's what the market's pricing. And, going back to what we heard here, when we heard here back from Gundlach in here, he's saying, believe the market, right? Believe the bond market. Pay attention to the bond market. His experience says do that. The bond market tends to get it right, okay? So the Fed will be reacting to potentially recessionary pressures in the second half of the year, and we'll get rate cuts. That's what he's saying, and that's what the market is pricing in as well in here. So again, and that's where that article there, Fed's no rate cut mantra, and no rate cut this year, rejected by the market, so it sees a recession. Okay, policymakers' interest rates will be held high into 2024, but markets see rate cuts late in 2023. Okay, we've just looked at that. Okay, so and the markets continue to price that despite Fed speakers continue to tell us higher for longer. Okay, used to be the old mantra used to be lower for longer. Now we're higher for longer. Europe's inflation anxiety is fading quicker than prices. EC expects out to private consumer expectations survey. Officials plan to hike rates at a significant steady pace. So rate hikes continuing, but Eurozone inflation is near a historic high, but expectations in here starting to fall. Okay, and just to show you how, we spoke previously about how strong European markets are. Gas prices are falling. We've spoken about that in my weekly recap. I spoke about this. Gas prices are continuing to fall. We're having a relatively mild winter for the planet, and certainly in Europe. Okay, ski slopes in France don't have any snow on them at the moment. Ski slopes that are normally busy this time of the year have no snow. Okay, we're having a very mild winter in Europe, and that mild winter is seeing gas prices fall. Forward gas prices in here for this year are below where they were prior to the invasion of Ukraine. Okay, so we're seeing a significant fall in European gas prices, and not just the current gas prices, but forward rate gas prices for this year. Okay, for like 1 year out, are below the levels pre the. So that's seen as a positive, obviously, reducing inflationary pressures, and headline inflationary pressures also falling. And we're seeing, despite ongoing issues in the UK, and believe me, there are issues, and despite rate hikes taking us probably towards a recession this year, we're seeing banks and miners, retail, all doing well in the FTSE 100 being the benchmark. And that's getting very close back to all-time highs, unbelievably, right? It was one of the few stock indices, I think, that actually posted gains globally for last year. Okay, so we're up with, obviously, European indices broadly lower and US indices down anywhere between 20 and 30% in here last year. So, yeah, so significant. So FTSE in here up again this morning, and the DAX and the CAC. These are the UK, German, and French indices, in case you don't know. 0.6 up on the FTSE, 1% on the DAX, and nearly 1% on the CAC. So all very positive. And we look at the overnight in here. Yesterday, we were obviously nudged higher on the US stock indices in here by between 0.5% and 1%. And this morning, we're slightly higher in here, between 0.1 and 0.2 in here this morning, nudging higher. I think we're going to likely get a consolidation day today. Skewed risk continues to the upside from my perspective. So I wouldn't be surprised if we nudge back up to the highs that we saw early this week before we fell back down lower on Monday. Okay, so it was a dip. So a rally and a setback on Monday, a dip and a bounce yesterday. We're kind of sat right in the middle. If you look at the range for this week between the high and the low, we can zoom in on that when we go to the intraday chart. We're sat right in the middle of that. I wouldn't be surprised if we end up at the upper end of that before the CPI data. So for me, look, a consolidation day likely, but I think skewed risk slightly to the upside. And you've seen we're also broken out from this range that we were in from the back end of last year, and it feels to me that the next move's higher. Let's look at those moves though for the last three CPI data. Okay, there. Remember, I did call the low on the day after that. Okay, called this the low. So that was the 13th of October. On the 14th, I said I think that's the low for the bear market. Okay, that was a massive turnaround day, big spike lower. Remember, inflation actually came in higher than expected, and then it ended up rallying on the day. Then this was the next one. Okay, so that was back on the 13th of October. Here we are on the 11th on 10th of November. Okay, 13th of October here, 10th of November again, a massive bullish Marabuzo candlestick in here. And then I think this is the other day, right? Yeah, so here we are, 13th of December, big spike higher on that one, big failure candlestick. Okay, so two very bullish candlesticks from October and November, a bearish candlestick that set the market lower for the following week. Okay, if you look at the aftermath of these candlesticks, okay, what set the trend here? Boom, then sideways, but still higher after this big Marabuzo, and then boom. So not only day trade opportunities, okay, and obviously on the October and December, these two, we saw the initial move in one direction, then a turnaround. November was straight line up, and then December was up, then down. Okay, so the market can turn around within the day. However, you can see it does set then not only gives you opportunities for the day, it does set a precedent then for at least like the next week. On this one, it was such a big day, the market kind of chopped a little bit, but it did end up, over the week did continue higher, and then here obviously over the next week we continue lower. So the next Thursday's data likely set the precedent for where the market's going at least for a week later, and obviously lots of opportunities. Keep your powder dry, okay, is my big piece of advice for today, right? If you're sitting in your account, don't blow any today, just try to stay steady, give yourself lots of opportunities because there will be opportunities tomorrow, almost certainly. Let's just step in at what the opportunities might be today, though. In here, here's the 15-minute chart, and you can see if I just go back to the daily in here. So we've got the high low in here from the last 2 days, okay, between basically 39.76 and down here at 38.94. So if we look at that range in here, so from here down to here, okay, from here to here, and where we're sitting, we're sitting just in the upper end. We did a little technical Tuesday. Let's just go back and talk about that. Actually, just going back into here. If you dip into here, resources, technical Tuesday, guys. Okay, click on that. Takes you to here, technical Tuesday. And what you'll see is the archive video, video 3 on Fibonacci retracements and extensions. If you want to go and take a look at that, I did that yesterday. And so take a look at that if you've got any interest in Fibonacci, okay? And just, how I apply it and what I think is useful and ways to use Fibonacci, okay? But going back to where we are today, so just looking in here, you've got kind of Fibonacci levels in here. Let's take a look at where they are in here. So let's take a look at the retracement of the whole rally, okay? And what we'll find in here is the market just dipped, flirted with the 50%, but pretty much held the 50% there, just dipped below the 50%, didn't accelerate, held it on this go here, and then was back higher. Now let's look at the Fibonacci for the down move. Okay, and you can see we're up through all the retracements, including the 61.8. And if I go in and put on the, I'm going to add in the 78.6 in here. Whoops. Okay, we're stalling right at the 78.6. So that's going to be the next trigger through 39.55 on the top side. So for me, there's an underlying positive bias from this rebound we've had. Okay, we held on to the positive bias from the whole up move that we saw from the beginning of the year. That bullish move that we saw from the beginning of the year, because we held the 50% retracement, okay? And now we've recaptured all but the 78.6% retracement up through there, neutralizes the setback we had in here early this week, and then that points us to the upside as well. And if we also look at the retracement of the up move, okay, so from today really, from yesterday through today, look, we're so on the dip in here, we're holding above the 23.6 at the moment. If you look at the lower retracement in here, if I get rid of this one, and we look at the initial move from yesterday. Okay, so we held above. Oops, that's the wrong way around. Let me do that around the other way. Oh, golly gosh. No, it's not having it either. 1 second, guys. Apologies for this. Let's get rid of this. I'll get there in a second. So look, I'm not taking it from the very high. That's give us the levels that we're looking at for now. You would take it right up to the high. But what I want to see is where we held here. And you can see from yesterday's rebound here, okay, or the rebound from yesterday pretty much. Yeah, yesterday's rebound, we held, look, on the little check on the overnight, we held above the 23.6, almost exactly above the 23.6. So that's positive as well. The very minimal first retracement, the market holds above that, and then we went higher. So this one's no good to us anymore. This level's kind of not relevant apart from the swing low here. Okay, the 23.6, because now we made a new high. Yeah, we made a higher high. So you'd push this then up to up to here, right? You take this up to here, and then I pull this back down to the low there. So now we're looking at this as the retracement. Okay, so yeah, but what you can see is here the market's defended the support, and it's poised just below this 78.6% retracement. So a break above there, but through the current high and through the 78.6% retracement around 39.55.5, then opens up not just the peak in here, but then if we go above the peak, where does it take us? This peak, okay, you can see in here from the whole sell-off, okay, that peak went in kind of just below the 50% of the sell-off since the CPI data, the last CPI data. Okay, so there's the sell-off from the CPI data. The halfway point of that comes in around 39.85. So that would be the next target. And you can see in here, I spoke about clusters yesterday. You've got a lot of support in here, old supports in here around near that 39.85 level as well. So I think that's going to be an important level. You break above the high, 39.55, up through there, would then take us up towards, up through the recent high here, 39.73 and a quarter, okay, up through 39.75 as well, and then takes us up to this 39, 85, 86 kind of area, this 50% retracement, and up through there would then even offer a bigger move up. I don't think you're going to get much of a bigger move. Maybe up to 4,000 today would be the top side limit, I think, given that we're going into a massive piece of data tomorrow. Okay, just a quick look at the Nasdaq in here. So the market again. Look, if you look at the range in here for the last 2 days, you get this failure candlestick. Then you get the rebound in here yesterday. We're up way through 50% of that in here. So all focused back up to the high, and you can see that high there from earlier in the week. Up at 385.5, put in respect to these peaks in here, okay? So 384.75, 389.75. So up through those, again, maybe up towards the 50%, okay? Which brings up to like 11,550, okay? That kind of area. So certainly looking for a retest of the high today and maybe up to that kind of level there. Okay, I'm going to do a very quick nod to the commodity markets. So here we are, gold, very, very resolute, grinding high after that impulsive move that we saw last week, grinding high and fully can only be long on this one and looking for further upside through the peak in here, then offers up this peak over here. So you've got a failure high up there, 1910. So up through the current high, overnight high in here, 1890 and 0.9 takes us up towards 1910. Let's take a look at oil. It's kind of stayed negative on this because of the sell-off that we had last week, this big sell-off. The market kind of not still inside pretty much, okay, consolidating within the pattern of that second big down day that we saw back on the 4th of January. So we kicked off, so the end of beginning of this year, 3rd and 4th of January, 2 big down days. We're still contained below the impulse point from the second day, despite pushing higher in here. If I just step into the 15-minute chart, we are trying to nudge higher, but whilst below at least that little peak there, 75.92, and certainly whilst below this one in here, I'm staying negative. That's 76.74. But there's maybe a quick little day trade through 75.92 for a move up towards 76.60. But I don't think the risk reward is going to really work for you there. I'd rather wait to sell it if it moves up towards between 75.92 and 76.60 with a stop and reverse above that peak there at 76.74. Quick look at the 10-year. So 10-year did get a setback yesterday, is rebounding. Underlying theme is for recovery from the last week and a half in here since the end of last year. So recovery theme intact. Yesterday looks like a correction, remaining positive in here. And if I go and take a look at the 15-minute chart, just zooming in. So there's the strong rally that we've seen so far and the very impulsive rally that we saw back in here. Whoops. What happened there? Oh, not sure. Little glitch. So the very strong rally we saw here from the 6th of January. And again, putting the Fibonacci on this. Okay, going to get rid of this. So I'm just going to take it from just this up move, this more aggressive up move that we saw. And you can see the market just dipped below the 38.2, kind of respected that 38.2 and then rebounded in here. And if we look at what it's done from the downside, move in here, we're up right, we went right and nudged to 61.8. So back up through the recent peak in here, the 61.8% retracement would be quite a bull, and the recent peak and the 61.8 would be a bullish statement in here. And again, I would probably zoom in now in here and look at this down little counter trend line. Well, you're kind of already breaking up for it now anyway. But if we get back above, I would say 14.10.5. Then it definitely opens up risk up to the peak there from yesterday, or from 2 days ago, from yesterday, which is 14.13.5, and then maybe back over to this peak up in here. from the end of last week. So sorry, from the beginning of this week. Sorry, that's yesterday's peak. Yeah. So up through 14.10.5, aims for 14.13.5, and then maybe up towards the more recent high here at 14, where are you, 21, 23, 23.5. Okay, so staying bullish there also on bonds. Okay, so not much to really watch out for today on the data front. Watching those trigger points potentially, but for me, I'm staying kind of tentatively bullish on stocks, bullish on bonds in here. Still tentatively negative on oil and bullish on gold. But tomorrow is going to be the day, so keep your powder dry for tomorrow. I'll be back with you then for another bull versus bear webinar ahead of the all-important CPI release. Until then, take care, stay safe, and have a great trading day. Bye.